What if I told you that everything we know about money is about to change? Imagine a world where no government, no bank, and no central authority controls your financial future. A world where your money is yours completely. No middleman, no gatekeepers. Just a system that's transparent, secure, and built to last. This isn't some crazy pipe dream. It's happening right now, and it's called USH, a game-changing decentralized stablecoin from Haddam Labs. But USH isn't just another digital currency. It's the key to a new financial system, one that's going to reshape everything we know about stablecoins and DeFi, and trust me, you're gonna want to be part of it. Now, before we go any further, let's tackle the elephant in the room. If you've been around crypto space for a while, you're probably thinking, well, hold up, didn't we see a stablecoin collapse before? What about UST and Luna? And honestly, it's a fair concern. The collapse of UST and Luna in 2022 was a massive event that shook the entire space. But here's the thing, USH is nothing like UST. Let me explain why. First, UST was an algorithmic stablecoin, meaning it wasn't backed by real assets. It used a mint and burn mechanism involving Luna, the native token of the Terra ecosystem. When UST's price dropped below $1, users could burn UST for Luna, and when it went above $1, they could mint more. It all sounds great on paper, but when things went south, this mechanism triggered a death spiral. Luna's supply inflated uncontrollably, and UST lost its peg and will never recover. Now, USH is fundamentally different. Unlike UST, USH is over-collateralized. This means every USH in circulation is backed by more crypto assets than its value, ensuring that there's always a buffer to maintain the peg. So when you mint USH, you're locking up more value in collateral, up to 75% of its worth in the Haddam protocol. This ensures that USH is always fully backed. And here's where it gets even more secure. USH isn't just backed by a single asset like Luna was. It's supported by a diversified basket of cryptocurrencies, including EGLD, BTC, ETH, and stablecoins like USDC and USDT. So even if one asset like EGLD experiences a price drop, the other assets in the basket absorb the impact, keeping USH stable. Now, on top of that, the Haddam protocol has built-in mechanisms like liquidation buffers and redemption to ensure the system never spirals out of control. If the value of the collateral drops too low, liquidation bots step in to sell a portion of the collateral and maintain stability. And to avoid sudden liquidation cascades, the protocol only liquidates up to 50% of a loan at a time, preventing any drastic market shocks. Plus, the protocol even has circuit breakers in case of market manipulation or extreme price movement. If a large price spread is detected across exchanges, the system pauses certain actions to prevent malicious activity. This has been battle tested and proven to work in previous market downturns too. So in short, USH has fail-safes that UST didn't. It's over-collateralized, backed by multiple assets, and equipped with mechanisms to mitigate risk. This isn't just a promise of stability, it's a system built to withstand market turbulence. Okay, now that we've cleared that up, let's take a quick look at why stablecoins are so important in the first place, and why USH represents the future of decentralized finance. For years, stablecoins like USDT and USDC have been the backbone of DeFi. They offer the promise of stability in a volatile market. But here's the catch. Most of these coins are still centralized. They're backed by traditional assets like US dollars sitting in a bank somewhere, which means they're tied to the very institutions we're trying to move away from in Web3. Some of them can't even prove that they're backed by anything. Here's a quick analogy. Imagine you're playing an online game and you've earned a bunch of in-game currency. You think you can spend it however you like, but then the game's central server crashes, or maybe they decide to ban you. Suddenly, your currency is frozen or gone. That's what happens with centralized stablecoins. If regulators step in or the issuer decides to freeze funds, which we've seen many times before, you could lose access to your assets. And this is a major risk with both USDT and USDC. So what makes USH so game-changing? It's not just another stablecoin among so many others. It's a stablecoin designed with the core ideals of Web3 in mind. First off, USH is 100% decentralized. So what does that mean? It means no single entity controls it. No company, no government, no bank. You see, with most stablecoins, there's always a risk that someone, somewhere, can freeze your funds, and we have seen it happen numerous times. But with USH, that's impossible. It's built on a decentralized network where no single entity has control. That means no one can freeze your funds, blacklist your wallet, or stop your transactions. Period. Instead, the entire system is governed by the community. That's right. You get a say in how USH operates thanks to Haddam Labs' Decentralized Autonomous Organization, or DAO. So if you've ever wanted to be part of a financial system where your voice actually matters, this is it. And here's where it gets even better. Transparency. With USH, everything is visible. You can see every transaction, every piece of collateral, something USDT can't say, and every USH minted in real time on the blockchain. No secrets and no hidden risks. Just a stable, decentralized system you can trust and verify. Okay, let's get into the nuts and bolts of how USH actually works. It's surprisingly simple, yet incredibly powerful. To create USH, you deposit assets like MultiversX native token EGLD or other supported cryptocurrencies, including liquid staking alternatives, into the Haddam protocol. These assets are locked as collateral, and in exchange, you receive USH stablecoins. It's kind of like putting your valuables in a vault and getting a loan in return. But here's the difference. This vault is decentralized, and the loan is fully backed by your assets. And the best part, it's all done through smart contracts. So instead of trusting a person or a company to manage your assets, you're trusting code. Code that's been audited, tested, and proven to execute flawlessly. No human intervention means no human error. Everything is automated and transparent. Plus, because USH is over-collateralized, even if the value of your collateral drops, the system ensures there's always enough backing to keep USH stable. No stress or no losing sleep over market volatility. It's kind of like having an insurance policy for your crypto. USH isn't just a stablecoin, it's the backbone for the entire DeFi ecosystem. Think about it. In DeFi, you need stability to unlock the full potential of decentralized applications. Whether you're staking, borrowing, lending, or trading, USH provides the reliability and trust you need to confidently navigate the DeFi world. And here's the kicker. This is just the beginning. As more people adopt USH and as the Haddam protocol continues to evolve, we'll see entirely new financial applications emerge, things we haven't even imagined yet. USH isn't just about copying the old financial system. It's about creating something better, something more inclusive, more transparent, and more secure. The world of finance is changing fast. Centralized systems are starting to reveal their weaknesses, and we're at the forefront of a new era, one where financial power is truly in the hands of the people. USH from Haddam Protocol stands out with its 100% decentralized nature, over-collateralization, and a commitment to full transparency. No other stablecoin offers this unique combination. So whether you're deeply invested in DeFi, looking for new investment opportunities, or just intrigued by the future of money, the time to get involved is now.